Alrighty, good morning, everyone. Good morning here. Um, I'm going to have a quick run through the markets and just give you an idea of where we stand as per usual and what to expect for next week. I've said during the week that next week should be a pretty pivotal week for the dollar and for the dollar crosses in general. I'm going to go through that from a kind of larger frame perspective here to show you why that's the case, and if it doesn't happen, what we should expect to happen after that then. Okay, so here is euro dollar, and this is the 4-hour chart. From the top, obviously, we've seen this impulse wave down, correction, impulse wave down, and so far I can view this as a correction because it can be viewed both ways. It can be seen as 3 waves up or a larger extended impulse pattern. Now that's where the rub comes next week. If this isn't a correction higher, and from the glance of it, it doesn't look like a correction higher. If it's not a correction higher, well then we should see a break of that previous wave 2 high here, and we'll see the price challenge that previous 120.91 high there. And if that's the case, well then we're looking at a kind of a larger, let's say, a larger degree bullish correction. If you can, let's go to the daily chart. We could say that this structure in euro dollar could probably correct higher to maybe, let's see, 3 waves in A, 3 waves in B, and again I'm on the daily chart, and then maybe a 5-wave pattern up into the maybe 129 area in a C wave. Right now we're looking at 3 waves A, 3 waves B, and a complete 3 waves C, and we had a nice decline off that high, which kind of added weight to that viewpoint. Right. For, say, the alternate count on that, we have a higher wave B, which would come in the form of 1, 2, 3, 4, 5. And that's, say, the Fibonacci extension there of wave A gives us about 123, but I'd say it would probably pop above that. We'd probably get, just from the look of it, we'd probably get 127 or maybe 128 out of that. But that's for the alternate count this week, and hence the reason this week is going to be pivotal for euro dollar. So let's go back down to the 4-hour chart here. In essence, what I'm wondering is, do we have 1, 2, 1, 2, or do we have ABC complete at the recent low? So that's what next week's going to sort. If it's the case that I'm correct here and we have a 1, 2, 1, 2 pattern off the high, well then we should see a clear acceleration to the downside, probably even Monday morning, going by the short-term count, because we had a nice spike down on Friday there. If that doesn't happen, well then we will look to changing to the alternate count, which will see one more high and then a completion of the larger correction. Let me see that again, and then a completion of this whole larger correction, wave B, and then another dive down. So euro dollar for next week on the short-term chart, do we get a completion? Do we get a kind of an extension of this little spike to the downside on Friday, and do we start running into wave 3 brown? Do we start declining and accelerating wave 3 brown? That's the kind of pivotal question at the moment, and we should know pretty early. Maybe by Tuesday or Wednesday, we should know definitely whether this is going to develop to impulsively to the downside. And if we get a break of resistance at 118.80, well then we'd have to start contemplating the alternate. Okay, so that's euro dollar. The euro dollar. Let's say, how can I clarify this? Euro dollar next week, it needs to decide what it wants to do. Okay, the market needs to decide, and at least we know where to change our focus, or at what point we change our focus. So let's move on to cable. Alrighty, so we had the rises in cable haven't been as convincing, let's say, as Eurodollar. So I'm more comfortable with the bearish outlook on cable than I am on Eurodollar, and I'll go through the reason for that. The decline off the high, like that high when it came in, we almost picked it to the pip, I think, and the decline off that high is a pretty damn impulsive structure. I mean, you can go out on a limb and read it another way, but I think that is as good an impulse structure as you can probably get. And then we had this failed wave 2 because the wave C did not make a new high above the previous wave A. But we had a 3-wave structure, wave 2, and then off that high we had a shoot, a real sharp impulse wave to the downside, and then from that recent low we had 3 waves up, and that 3 waves up is probably just complete on Friday. You can see, and that's A, B, C. And if you're going to look, I mean, if you're looking for a candidate for a corrective move, that move over the last week and a half has been the candidate. So let's get down into a shorter term chart to see what's happening here. 4 hours first. I'm looking at a wave 1 down, wave 2 in brown, then wave 1 down, wave 2 in pink, I think it is. Yeah. We could even move that out to a degree higher. I mean, this could be wave 1 in green at 1 degree higher, and wave 2 in green also at 1 degree higher. It's quite possible that that's what we should be counting. It doesn't make any difference. It's a distinction without a difference. It's just moving at a higher degree, and I may even change it to that because it will allow us to count the internal waves clearer, if you know what I mean. Let's go down into the 30-minute chart and you'll see. Okay, so that impulse moved to the downside in the early November. From that point, we've had 3. It's hard to, well, we can't count that right now, but it's hard to count. It's hard to count this rise off that low in any other way than a correction, and that's pretty much what I've been leaning towards over the last while. The only little hiccup in this particular setup here is, excuse me now, MetaTrader didn't save my count, obviously. All right, the only hiccup is this internal wave here. Is this wave A here? And have we a flat correction wave B? I'm kind of leaning towards that myself, to be honest. And then a C wave is possibly 5 waves up in wave C complete, and then a nice spike to the downside in a possible wave 1. So we may have a wave 1 and 2 complete as of Friday evening. So we have a nice impulse move to the downside. We have a possible A, B, C in one way, shape, or form, either A, B, and C, or A to this high or A to this high. It depends on how you read it. I would lean in favor of this labeling here with a flat correction in the center, and I'll show you that flat correction, or sorry, expanded flat correction. You see wave A up here, and wave A, B, C to wave B, and then wave C, completing wave 2. From that high, we did get a nice spike to the downside again, which took out previous highs. So in terms of the expected move, say early next week, we would be talking about a continuation of this spike to the downside. I want to see definitely in Eurodollar, and yeah, but it's not as pivotal. It's not as pivotal for cable to decline immediately as say Eurodollar, but I would definitely like to see a kind of reinforcing of kind kind of downside dominance, let's say, in the structure, because we've had just too much correcting higher, and I want to see these. Third waves come in both structures, most definitely in euro dollar. But yeah, it's time for cable to start. It's time for cable to start dropping now as well. If we go to the 4-hour chart, I'll show you where we stand on that count. So, like I said, a wave 1 down in either degree, 1-2, sorry, to the downside in either of those degrees, and then we should be spilling down into a third wave. I don't see any other viable way of looking at it right now, unless something happens next week, which kind of brings another pattern to light. But I don't see any other viable way to look at it. That we've taken out previous highs, we're challenging. We've taken out 1, 2, almost 3 previous structure highs. Obviously, this previous B wave here needs to go to kind of change this momentum completely. But we have a setup of 1, 2, 1, 2 to the downside here in cable, and I think we're on the verge of a quite a large move down here. And it won't be anything to do with politics. It won't be anything to do with kind of, say the structure of the government in Downing Street, or if Theresa May gets ousted or anything like that. It's just a kind a shift towards negative social mood, basically, on cable, and a shift towards a kind of a more conservative attitude in the or kind of a flee to safety, let's say, in the dollar against the kind of lesser powers, the lesser currencies in euro and in yen and in pound as well. So I'm looking for a third wave down on Monday. I want to see in both euro dollar and in cable a shift to the downside and accelerations to the downside, and that will kind of solidify the bearish outlook at the moment. All right, so let's get into dollar yen. Again, dollar yen, that spiked to the downside again yesterday, and MetaTrader did not save my alterations, which is blooming annoying. Okay. All right, I'm going to go out to the 4-hour chart anyway. It's the same situation for the opposite situation, but the same situation for dollar yen. The dollar has made impressive gains over the last let's say 2 months. We've gone from 107 to 114 highs, so we've made 700 points over the last 2 months, and the structure looks like it's just correcting to the downside still. It doesn't look like it's changing direction in any way. We've broken out previous highs just the other week there, last week. We broke out that previous wave B high, which kind of indicated that this market is very willing to kind of turn bullish. But once we did break out that high, we started this larger correction here. So I want to say that there's two, if not 3, different bullish ways to look at this. So as shown on the chart here, we had wave 1 up, wave that can either be wave 2 here, or this can be wave A, B, and C, and 2 would be over here. So that's the kind of the 2 clearest ways to look at this. Have we a complete wave 2 at the previous low here, or do we get another further expanded flat wave 2 here to in around the same price level? Probably, a dip below 111 would complete that expanded flat there. And we'll see that next week. Either way you look at it, I mean, it's a bit of a bummer that correction has come in, has extended so low. If that's what it's a bit of a bummer that this correction has kind of extended and kind of it's killed momentum basically on the upside. But if we are tracing out a larger degree wave 2 here, well, then we should expect a larger degree wave 3 to the upside. It still doesn't change the kind of medium to long-term outlook here. We have impulse moves to the upside, and we have corrections to the downside. There's no other way to look at that than, you know, that this market is just correcting and should move to the upside again. And what we will look for, it's been a frustrating week, obviously, that dollar yen hasn't kind of conformed yet. But what we should look for is either, you know, we get a break of support and we switch to the larger account, but we still need to see that kind of spike higher low and an Elliott wave signal off that low. Whether that comes in, you know, very soon and we keep the current short-term count, if we get a spike up on Monday and Tuesday to a higher low, and then we continue to accelerate up in wave 3, I'll take that. I'll take either way. I'll take either way points to the same larger outcome, and that is that the dollar is going to move into a larger bullish phase, and we will see, you know, pretty significant price gains in pretty significant declines in Eurodollar and cable, and pretty significant gains in dollar yen. So for next week, early next week, we look for this support to hold, but if it breaks, we switch to the alternate account, and then we look for our move up higher low. Nice kind of tight stop with a good trigger point, and, you know, however you want to enter your trades after that, it's up to you. But we'll get a nice kind of confirmation and invalidation, a kind of scenario on the chart, and we'll be able to kind of narrow our focus, let's say, towards that goal. So that's what dollar yen is looking like early next week. So let's move on to stocks. And like I keep having to say to people, the charts I use are the broker I use is IG Index, and they are basically a derivative company. So they don't offer like cash products. They offer, you know, derivative products or derivative markets. So the charts that I show here in the currencies is pretty damn spot on. But in, say, gold and crude and in the Dow, the charts are just slightly skewed. We get little spikes below previous lows, and we get spikes higher than the previous highs, which kind of makes it a little bit annoying. But, you know, it is what it is. I'm kind of over-invested in them now at this stage, and I kind of I've looked into changing from IG, but I haven't gotten around to switching yet. You know when you just get comfortable with something and you just accept their failures over time. But anyway, okay. So we have, if you want to look at it in the most bearish kind of outlook on the short-term perspective, we have a bearish Elliott wave signal complete with a bit of confirmation on it too, in the Dow right now in stocks. And I say that with trepidation, like, because calling tops is a risky business, and people just bloody your nose the whole time. The amount of emails I get saying, "Wow, you know, what are you doing calling a top for? You've no idea. You know, you call a top here and you call a top there, and you get called every name under the sun. But hey, you know, you got to stick your neck out now and again. And I have a thick skin, so you throw it at me, you know." I kind of don't care. I'm married with 2 kids. You know, nothing anybody can throw at me can faze me now at this stage. All right. So I think we have one way of looking at it is we have an Elliott wave signal, a bearish Elliott wave signal, complete off the high. The way I count that is 1, 2, 3, 4, which is a running flat wave 4, and then a spike lower in wave 5 to complete 5 waves down in a possible wave 1 gray. That's the way I've labeled it. I mean, it could be 1 degree higher as well, so we'll just leave it like that for the moment. And then off that low, we got a B, and a rally in wave C. And I think that's an expanded flat. I'm going to have to work on I gave up coloring a long time ago, so I'm going to have to work on my illustration. So an A and B and C, expanded flat, possible wave 2. And since we were calling that on Thursday evening, on Friday, we got a nice, again, a spike lower in what can be viewed as an impulse wave down. So next week looks pivotal as well for the Dow. Do we get correction and further declines to break support? And that would be kind of, in terms of the short-term count, that would be the ideal way for this to work out. And which would mean, scarily enough, that we have a possible bear market underway. And I know that's sticking my neck out saying that, but to heck with it. You only live once. So the question next week is, do we have a complete Elliott wave signal? Does the previous high hold? Does Friday's high at what was it, 23,490? Does that hold? Or was that Thursday's high? That was that was Thursday's high. Sorry. Does 23,490 hold on Thursday's high? Do we get further kind of impulse declines and corrective rises? If that's the case, well, then we're looking at a pretty interesting period in the stock market. If I were you and you were looking to trade this, I would be looking to next week to being a kind of a point where we look to confirm levels for entry. So previous support there at 23,242 looks like a pretty it's an important level. But if we get a bounce off that, we probably will get a bounce off that in some way, shape, or form, because the market just doesn't want to let go of this this overall kind of bull market, this stupid bull market. Just doesn't, as it never does. Nobody ever wants to kind of shift into a negative pattern at all. Once you're in the party, you don't want the party to end. So next week, I think, could be again pivotal for the Dow, because if we get a series of lower highs and we get kind of further impulsive kind of extensions to the downside, well, then we're moving into a bear market phase, and previous highs will be a kind of resistance, and previous lows, if they're broken, they'll turn. Sorry, these previous spike lows here will turn into resistance as well. So we'll start to see a kind of a spillover effect in the price structure. So that's why next week should be pretty pivotal. Obviously, we want to see previous resistances. We want to see those hold. So for Monday, I don't want to see any break of 23,490. That doesn't mean we won't get it, but I don't want to see it. And if we get further impulse declines, then we're looking at moving into a kind of, let's say, a confirming price action that the high is actually in. So for next week, I think eyes on stocks, because we could be getting pretty scary from now on. Alrighty, gold just does not want to let go, as I've spoken about on Friday. And again, I need to change my count live. I had kind of taken out these the immediately kind of short-term bearish outlook yesterday. I can neither count this structure to the downside or to the upside as particularly impulsive, or can I say that I can rule out, let's say, the the alternate count here. And the alternate account, if I can go down to it here, is that we have wave 1 and wave 2 complete here in this earlier spike there in October, that we had a 1-2 wave up. You know, like I was saying last night, it's hard to discount that right now, given that Friday took given that on Friday we had complete reversal of what I was expecting on the short term, which was a continuation of this C wave down. I can't, I can neither confirm nor deny the fact that this market may have changed. I may have bottomed here at this previous low there. I think it was 1261.08. So for next week, if this turn is actually in, and if we are, say, on the verge of accelerating higher, well, then the only way to read this is a series of 1, 2, 1, 2, 1, 2, 1, 2, and then a possible extension higher in a third wave. It's a long time churning, but it does have some bullish aspects to it, in the fact that we've got higher lows, no breaks of previous lows. I mean, the rallies off previous lows haven't been particularly, encouraging either, but that may be about to change, and we do have that alternate account on standby. So if we get I've talked about 1306 for a while now, for the last month. If we get a break at 1306, well, then I think we can switch to a kind of a bullish outlook in the short term. In the long term, I'm a super bull anyway, and I'm bought into gold anyway, so for me it doesn't really matter. But for the short term, if you're looking to get in, I think 1306 is a confirmation point with previous, as long as these previous lows stand and don't get taken out. So for next week, again, is this market, the whole kind of, there seems to be a churn happening in the markets that I follow. There seems to be kind of this larger kind of theme that's trying to kind of shift momentum within these markets. It's trying to halt stocks. It's trying to change from a bull market to a bear market in stocks. It's trying to lurch itself out of a kind of a long extended correction lower in gold. It's trying to push crude higher. It's obviously it's going to be a corrective high in crude, and we'll get to that in a second. It's trying to shift the momentum in the dollar also, and I think it'll win out in the end. Whether we see that next week or not, that's what we're looking for, and that's what I'm going to keep my eyes peeled for. But in general, in gold, I cannot rule out this alternate account, and given Friday's action, it may well be that we'll be switching to an immediately bullish outlook for gold pretty quick. So let's see how Monday goes. We'll leave it at that one. I can't comment anymore on that. Okay, so for crude oil, we were looking for this 1-2-1-2 pattern to break higher, and it did. I hope some of you got that. I didn't get that, but I hope some of you got that. We had, like, this is just kind of a persistence to the upside over the early part of the week, and I was looking for a third wave up with a break of previous highs, and that happened on say Friday morning, was it? Yes, Friday morning. We just shot higher. So we are looking at it's either a 1-2-1-2 like I've shown there, but I think the better way to look at it is a series of 3 1-2 patterns to the upside, and this is what I showed on Friday evening. So we may have a series of 3 1-2 waves to the upside, and that kind of that spike higher happened. So we could be moving into wave 3 of 3 at the moment, and that would explain, why that's the market kind of jolted higher and took out those previous kind of spike lows we had in the previous structure. So for early next week, I'm looking for a continuation of this third wave in pink, kind of shallow corrections maybe, and completion of a third wave in gray, and then completion of, that won't happen next week, but what we're moving into this completion of the 5-wave pattern, or the acceleration middle part of this 5-wave pattern to complete wave 3 blue and wave 5 brown. So we're talking about wave 5 of 3 here unfolding in front of our eyes. So for next week, like I was saying on Friday there, I want to see a kind of a closing out of this third wave, probably Monday into Tuesday, and then a move into a minor correction in wave 4, maybe some sort of triangle or something like that, and then a move up in wave 5, and that 3, 4, and 5 will complete that larger wave 3. So what we're looking at really in general is kind of let's say shallow corrections and jolts to the upside, a shallow correction and another rally to the upside in what should be a series of wave 3s and 4s. So that's kind of the outlook for the next, how do we look at this? Probably until early December anyway. We get a completion of this larger impulse pattern. So series of wave 3s and 4s complete that larger impulse pattern. Now we still have a target up around the $70. It may not. It may not reach that. We'll see. We'll see how that works out. For the moment, we're making good inroads into that, although it is a long way off just yet. So this week kind of confirmed for us that we may have wave 4 complete and that we may be moving up into wave 5. So for next week, we wanted to confirm that these it starts hitting wave 3 and 4 and break to new highs again. So so far so good for the crude oil count. Let's see how this continues next week. Alrighty, that kind of shuts it out for me. I've done another marathon dive into the markets, and I hope you all have a great weekend, and we'll see you again on Monday. Have a good one. Bye-bye.